Nvidia just reported over $81 billion in a single quarter, beat Wall Street on almost every metric, announced an $80 billion buyback, and somehow the stock still dropped. Welcome back to Stocks Decode, where we break down what's really happening inside the stock market, without the hype, without the confusion, and completely in plain English. Nvidia reported $81.6 billion in revenue. Wall Street expected $79 billion. Earnings per share also crushed expectations, and guidance for next quarter came in even higher. And on top of all that, Nvidia announced an $80 billion stock buyback, one of the biggest in market history. But instead of rallying, the stock still moved lower. This is where Wall Street psychology comes into play. Big institutional investors already expected incredible earnings, so once the report finally dropped, many funds simply took profits and sold. The second problem is valuation anxiety. Nvidia has become so massive that investors are now asking a terrifying question: how much bigger can this company realistically get from here? Nvidia has beaten expectations so many times that beating expectations is no longer enough. Wall Street now expects perfection every single quarter, and that creates dangerous pressure. Even Jensen Huang himself described this as a no-win dynamic, where Nvidia can deliver historic results, and the market still finds reasons to punish the stock. But despite the short-term sell-off, Nvidia's actual business is still growing at an insane speed. Their AI data center division alone generated over $75 billion. The AI spending boom is still accelerating globally, and the biggest tech companies on Earth are continuing to pour hundreds of billions into Nvidia-powered infrastructure. Right now, the market is completely divided. Some investors think this is just a healthy reset, while others believe it's the beginning of a much deeper correction. One major reason for the pressure is the macro environment. Higher interest rates mean future growth is worth less today, and that hits high-valuation tech stocks the hardest. This isn't just a Nvidia story, it's a tech-wide shift. Capital is rotating between mega-cap stocks, and not everything in the AI sector is moving in the same direction anymore. While retail investors panic, institutional money is doing the opposite. Big funds are quietly repositioning, looking for long-term entry points instead of reacting emotionally. So the real question is simple. Is this just a temporary reset in expectations, or the start of a much deeper re-rating of Nvidia's future growth story? Higher interest rates are quietly crushing high-growth tech valuations because when money becomes expensive, future earnings suddenly matter a lot less than today's profit.
The strange part is, the AI boom hasn't slowed down at all. In fact, hyperscalers are still spending hundreds of billions of dollars on AI infrastructure powered by Nvidia chips.
Wall Street itself is divided. Some analysts are calling Nvidia overvalued, while others are still raising price targets because they believe the AI cycle is far from over. Even volatility itself tells the story. Nvidia is behaving less like a stable blue-chip stock and more like a high-beta momentum asset driven by emotion. And that leads to the final question. Is Nvidia still in the early stages of a historic AI supercycle? Or are we already seeing the peak of unrealistic expectations? The truth is, Nvidia's fundamentals are still expanding at an unbelievable pace. Revenue growth over the past years has turned it into one of the fastest growing companies in history. And it's not just Nvidia. The entire tech ecosystem is still pouring massive capital into AI infrastructure, which continues to fuel long-term chip demand.
But there's still one major risk hanging over the entire industry: geopolitical tension between the US and China, and ongoing restrictions on advanced chip exports.
This is why Nvidia feels so unstable right now. Investor sentiment is swinging violently between extreme fear and extreme greed in real time. Even after the drop, Nvidia was still trading at one of the highest valuations in the entire stock market. The problem is, once expectations become this massive, even incredible growth can suddenly start looking disappointing. Wall Street has gotten so used to Nvidia beating expectations that beating expectations doesn't shock investors anymore. In fact, Nvidia has already delivered multiple historic earnings reports before, and the stock still sold off afterward. Investors are no longer asking whether Nvidia is winning, they're asking whether the company can possibly keep growing this fast forever. And that pressure is becoming enormous because Nvidia now sits at the very center of the entire global AI boom. Right now, almost every major tech company on Earth is racing to build AI infrastructure, and nearly all of them depend on Nvidia chips to make that happen. That's why demand has exploded to historic levels. Nvidia's data center business alone generated over $75 billion in a single quarter, and that level of growth is something the semiconductor industry has almost never seen before. And then Nvidia shocked Wall Street even more by announcing an $80 billion stock buyback, one of the largest buybacks in corporate history. A buyback this large usually sends a very powerful message to investors. It tells the market that management believes the company's future is still massively undervalued. But even after all of this, the market still couldn't fully decide whether Nvidia was the greatest AI opportunity of this generation or the center of a dangerous technology bubble. The bullish argument is simple. As long as the AI arms race continue accelerating, Nvidia remains one of the most important companies powering the entire industry behind the scenes. Every major company suddenly wants more computing power, more AI servers, more advanced chips, and Nvidia is still the company supplying most of that demand. And right now, no competitor has truly managed to catch Nvidia. The company built a lead in AI chips that may take years for rivals to close. But the bearish side keeps asking one terrifying question. What happens if the AI spending boom eventually starts slowing down? Because when a company is priced for near-perfect growth, even a small slowdown can trigger a massive stock correction almost overnight. And that's exactly why Nvidia has become one of the most emotionally traded stocks in the entire market right now. Some investors believe Nvidia is repeating history. Another unstoppable tech giant entering dangerous bubble territory. But others argue this AI revolution is still only beginning, and Nvidia could remain at the center of it for years. Jensen Huang didn't just build a semiconductor company, he built the backbone of the modern AI economy. Right now, the market is completely divided. Some investors see Nvidia as the future of civilization, others see one of the biggest bubbles on Wall Street. And historically, betting against Nvidia during major pullbacks has been an incredibly painful mistake for short sellers. But Wall Street money moves fast, and institutions are now becoming far more selective about which AI companies deserve premium valuations. And then there's another risk investors can't ignore anymore: the growing geopolitical battle surrounding advanced AI chips. If China successfully builds powerful domestic AI chips, Nvidia could eventually face one of the biggest competitive threats in its history. At this point, Nvidia is no longer just a semiconductor company. It has become one of the central pillars of the entire AI revolution. And the bigger Nvidia becomes, the harder it gets to keep shocking Wall Street with impossible levels of growth. After such a historic run, some investors simply decided it was time to lock in profits and reduce risk. This profit-taking by hedge funds is a major reason behind the stock's recent weakness. But despite the volatility, AI infrastructure spending across the world is still exploding at an unbelievable pace. The world's biggest tech companies are still spending billions of dollars buying Nvidia hardware as fast as they possibly can. And that's what makes this moment so fascinating. The broader market looks nervous, but the AI race is accelerating faster than ever. And if history has taught investors anything about Nvidia, it's that this stock has survived massive corrections before and still kept climbing. Some investors are panic selling this pullback, while others believe they're witnessing one of the biggest buying opportunities in AI history. Because this isn't just a bet on one company anymore. It's a bet on the future of artificial intelligence itself. And that's exactly why every Nvidia earnings report now feels like a major event for the entire stock market.